Hey guys, this is Julie. I want to point out a couple of things how to know if you're an inside day or a range expansion day using Jats PT. So one of the ways that we do it is to compare the Hvol to the Rvol. So I have the Rvol in dots and the Hvol in solid lines, and you can see the positioning if Hvol and Rvol are together compacted like this, and the RTH time frame is below the daily, you're going to get that inside day. And especially when you get your 15-minute ranges never exceeding that daily one range, all this small volatility. And you can see over here the threshold 16, 17, those are points. So you can see right here on my ruler, I've got 16, 17. Right, if I can grab it for you. And you can see that that's precisely where the bar is printed in this 16 point range, 16.17 range, give or take, right there, that just compressed in this little rectangle, 16, 17, and it's measured because it's the PT1, or that first volatility of variance. These are variance trading models, not standard deviation, so I hate to say one standard deviation. It's a different statistical calc for that variance. And so PT1, similar, I mean, it's a similar concept, so you might as well, it's the PT1 of variance. So you can see here that when the RTH time frame exceeds the daily, that's when we break this 16-17 cycle and the market moved above the R-ball, and you got that range expansion. You also notice that the Rvol is expanded outside the Hvol. See how it was all contained together? Contained together. It stays inside the ones. And then here we got the break. So when you're outside, you get those outside moves. And when you're inside, like right here, it came back inside, the market comes back inside the ones. So if you wanted to, put this together with a strategy, if you're expecting limited volatility and a neutral day, you could choose something like a short strangle, for instance, to sell premium. And then if it's more of a bullish day, so if your sentiment is more bullish, you can come over here and just choose a call, or a call spread, or a call strip, or a risk reversal, a put ladder, a synthetic, or a call spread versus a put. All of these are different option strategies that align with the difference between, the expectation of volatility and whether you're bullish or bearish. So if you're bullish, you want to, try one of these strategies. So you can come over here to the Quick Options website, go to their educational tab over here, and it will walk you through the dynamics of it, and then you can scroll down and see um, more information about the strategy. So having an idea of whether you're going to be overall bullish or bearish, or delta, inside or outside, is, the $64 million question, as if it were. And like I said, we can do that by the position of whether the market is inside the ones or outside, and the volatility is moving. And you can tell that by the Hvol Rvol. See how these 15-minute ranges, when they exceed the 1, they go to the 2, like right here, and then stalled out both times at the 2. It's hard to get a 15-minute range all the way up to the daily 3, but you could, change this to a 60-minute range and then see that you can often reach a 60-minute range to the daily 3 or beyond tails. But just tracking the real vol to the Hvol inside the 1, 2, 3s will help you whether you want to choose, a delta neutral or a call spread or put spread or one of the other option strategies. And also, like I said, this little tip, whether the RTH session, I have 390 minutes, between 8:30 and 3 p.m. at 390 minutes is over the daily 3. So that RVOL RTH over the daily 3 will signify that you're going to be getting range expansion. Whenever it comes back inside, that's contraction. Outside expansion, inside contraction. And then you can use your point levels to trade. The daily 1, 16, 17. When you break the 1, where do you go? You go to the 2, to 32, 34. If you break the 2, where do you go? You go to the 3. It's that simple. So, and then the market adheres to these tails. Usually you won't get outside more than, you know, 1.5 or 2 times the daily range. Like over here, you see how the 60-minute exceeded the daily 3, and that signified that we were into that expansion. You see it broke the 3, those orange lines, and then this range expansion ties into what you see here on the chart. So whenever you break the 3, that's when you get into your morning tail risk, if that helps. So you see all of these staying inside the 3, and you stayed inside your 3. Are y'all seeing this? So the Jats models accurately. If it's below the 3, you're going to be below the 3. If it's outside the 3, you're going to be outside the 3. So you can trigger your models on this for whether you're going to be in trouble with those spreads if you're selling premium. Here was an upside expansion that came back in. Broke the 3 right there. Here was an expansion to the upside into the tails. So that is an excellent reason why you would want to get the Jats PT indicator for a Ninja Trader. And I can help you with these templates, set them up so that you're seeing the same chart that I am. So get the Ninja Trader platform, get a Ninja Trader brokerage account, and then you can start modeling these for SPX like I do. You can see the weekly ranges. So if you like to trade weekly options or sell premium, it is the same thing. As far as the 1, 2, 3, usually, when it gets to a weekly 3, it's like right here, it came right back down. Come up to the weekly 1, touch it, come down. Hit the weekly 3 last week, came down. they trade these ranges. Here's a monthly. Tail down to the monthly Rvol. Um, 1.5 times the Hvol. And we're right in the middle of the range up here, by the way. 68.17 looks like the top. 68.07. So these mid ranges are a little bit precarious, especially when they're spread out like this. Um, so just be slippery when wet, right? Be careful. Here's another view of the quarterly. Here's a 3 month chart. I wanted to show you something. Let me maximize this. You'll like this. So you can put the monthly, 1 month, and 3 month on the chart at the same time. And so I'm going to change this to 1 month and then add a 3 month below it. You want the shortest time frame on top. And this allows you to get a concept when you have 1 month versus 3 month. You can get a distribution based on the 3 month open, high, low, open or close versus the 1 month. And that gives you a second distribution. Very helpful. So I hope you get that. So here is the 3 month one. And I want to change this to a 1 month on the 3 month here. Okay, and then this should be the 3 month on the 1 month. Okay, and then I'm going to put a Rvol on it. Okay, and then add one more. This time I'm putting it on the 3 month bar, which changes it from a 1 month to a 3 month open. So there's that little gap. Okay. So this fills in the monthly gap, and you can see why the market often will look, the high and low right here will, respond to these levels a lot. So, or you'll know where you are within this framework. You see here we got up to the 3, and then the next month you open back in the middle, and here we're back in the middle of the range. So we're in a new quarter in the middle of the range, and it's, like I said, slippery when wet. It's subject to moving quickly, responding to these lower time frame levels, which will get hit first. So just follow. I know I'm throwing a lot at you. Follow whether the range is going to be expanding or contracting, and that will help you navigate, whether to overlap sell premium day or range expand put spread call spread day. All right, y'all have a good day. Thank you so much.